My name is Antonio Martinez. I'm the Managing Director and Head of Americas and Global Economics at FrontierView, a fiscal note company. We work as a trusted provider and partner for over 300 multinational companies, supporting VPs of region, CFOs, strategy leads, strategic planning teams, as well as other functions within their organizations, usually with a very strong focus on empowering strategic planning, market monitoring, and risk management to drive growth and profitability, usually in emerging markets, but also just as we like to say, for our clients' most important markets. We have dedicated research practices for North America, Latin America, Asia Pacific, Europe, Middle East, and Africa, as well as very strong focus areas in healthcare and consumer. We work with clients across a variety of different verticals: pharma, medical devices, B2C of every kind, as well as technology and industrial companies, or what we might describe as the cohort of B2B. So last week, we were in Sao Paulo for a set of events and meetings, and I wanted to use this opportunity to discuss the outlook for Brazil's political and macroeconomic landscape with Julia Hoff, our Brazil analyst at FrontierView.
Thanks, Antonio.
So let's start with the first question, kind of a broader one around Brazil's story, let's just say. Well, how is Brazil's economic growth trajectory evolving? They basically, from the last 2 years, now get into 2025. Where do we see resilience and opportunity, and where we're seeing the potential for slowdowns?
Right. So the bottom line is that we're seeing a changing landscape from the last 2 years going into 2025. We saw a lot of growth in 2023 and 2024, primarily driven by consumer demand. In 2025, we're seeing a shifting landscape. So we're going from a scenario of around 3% growth to a scenario closer to 2% growth in 2025. And there are a few reasons behind that. We're seeing some complicating macroeconomic conditions like increasing interest rates, a devalued exchange rate, as well as sticky inflation, which is going to really dampen that heated consumer demand, as well as the heated investment market that we've been observing over the last 2 years. What that means for who are the winners and who are the losers going into 2025, we're really looking at extractives and agriculture as the primary winners. We're anticipating that we're going to see a big increase in production of oil in Brazil in the next few years. And so that's an industry that's going to continue to attract a lot of domestic and foreign investment. And we're also going to see a 10% improvement in agricultural production in 2025 compared to the lackluster performance of agricultural production in 2024. When we're talking about the losers, we're going to be looking at that interest rate and FX story. So the primary losers are, one, going to be retail sectors that involved durable goods that require any sort of long-term financing, any sort of loans. Those are going to be the ones that are going to see a reduction of demand. And then we're also going to be looking at sectors like construction and transportation, which also require a lot of financing and involve a lot of long-term strategic planning. Those are the ones that are also going to see a dampening of activity in 2025.
Okay. So one thing we've been hearing a lot from our clients globally, it's around the FX question. Right. And some of that is around that fiscal risk story. So talk to me about what our expectations are. And if you can give us some dates around when to expect movement around government measures to cut spending, and how will that impact the currency in 2025?
Right. So I'll start off by saying that Brazil is now experiencing a new normal when it comes to what is the FX rate. Previously, we were seeing rates closer to 4. We're now going to be experiencing rates above 5.5. So our anticipation is that the average rate for 2025 is going to be around 5.8. And there are a few reasons behind that. I want to say that the fiscal deficit is the primary reason why we're seeing this new normal, why we're seeing a general devaluation of the real. And specifically, the fiscal deficit is not something we see an improvement in the next 2 years. We don't anticipate that any sort of fiscal measures are going to really help the market perception around the fiscal deficit. That's because the government has already eroded a lot of its credibility with the market. And so even small measures to try to adjust that deficit won't have a big impact in terms of perception.
Okay.
Right. And so what we are anticipating is a small improvement, and that is because of other reasons. So primarily, the central bank has been intervening more in the FX market, doing more auctions of dollars, and so allowing for that flood of dollars into the Brazilian market. And we're also anticipating a little bit less pressure from the anticipation of the Trump presidency. So still volatility associated to Donald Trump, but the anticipation and that built up pressure has been alleviated.
Okay. So kind of talking about the market, obviously the most important segment for many of our clients is the consumer demand story. And that's been a major driver of Brazil's economy, especially its economic growth in recent years. You've talked about rising interest rates. You've talked about the devaluation of the real. How will these factors influence consumer sentiment and spending going forward? Is there anything else we should be thinking about?
Yeah, so I think that is our primary area of concern when it comes to the domestic macroeconomic landscape.
Mhm.
We're in a situation where we have a very devalued exchange rate and where we have rising interest rates. And what that means is that production costs have increased, particularly for any company that imports products to use as part of their production chain, right? And so what that means is that producers have been taking on a lot of the burden of those increased costs. And until December of 2024, they haven't really passed on that burden to consumers. Most of inflation pressures were coming from food and beverages and energy prices. In 2025, that is going to change. We're going to see producers pass on that effect to consumers, which means that especially industrialized products are going to see a price hike.
Okay. So Trump has initiated his tariff policies. Because I've been talking beyond the domestic market. Let's talk about some of those external factors, and Trump is top of mind for just about everywhere. Brazil hasn't been directly targeted yet, or at least hopefully by the time of production and publishing of this video. But we've seen some broader tariff measures, steel and aluminum, affecting Brazil. What are our expectations for future U.S. trade policies towards Brazil, and how could they have, like, if you can kind of tell us a little bit of how they would impact Brazil's economy?
Right. So my primary concern here is that Brazil is in a vulnerable position when it comes to any sort of reciprocal tariff policy that Trump is going to implement. And I want to frame this by saying that Donald Trump is going to be looking at 4 factors when he's deciding which countries to target. So number 1, he's going to be looking at that tariff differential. What is the average tariff that a country implements on the US versus what the US implements on that country? And Brazil is in a vulnerable category. We implement around 11.3% average tariffs on US products, while they implement 2.2% average tariffs. So that puts us in a vulnerable position. The second factor that he's going to be looking at is VAT rates. Again, Brazil is in a vulnerable position there, considering the very high VAT rates that we have here in Brazil. The third factor that he's going to be looking at is political ideologies. Does this leader align with my ideologies? Do we have a good working relationship? Again, Brazil is in a vulnerable position there. We haven't seen a direct confrontation between President Lula and President Trump, but they do have differing ideologies, and the potential for an escalation of tensions is there. Now, the fourth factor is the potential trade surplus between the US and Brazil. And that might be the only positive factor for Brazil there, considering the US has a small trade surplus with us. What that means is that Brazil is in a vulnerable position. But my primary concern here is actually not what tariffs the US will implement with Brazil, but it's actually what that means for global trade. If we see rising trade tensions between the US and China, for example, we see a Chinese landscape with diminishing Chinese demand, but an oversupply of production in China. What that means is that they're going to be looking for another market to supplement their exports from the United States. And Brazil becomes a logical choice given the large population that we have and large kind of consumer base that can supplement that demand that was coming from the United States.
Okay. Always fun to think about, plenty to look forward to. But one thing I think many of our clients are already starting to look forward to is the 2026 presidential elections. So what is our view in terms of our base case for what's going to happen?
Right. For 2026, I want to start off by saying that our base case is a shift to the right. So we are anticipating a change in administration in 2026. Now, that scenario is going to be different from what we saw in 2022, because in 2022, we had a left-wing and a right-wing candidate. In 2026, we're going to see a left-wing candidate and multiple right-wing candidates, right? We're going to be seeing people who are very aligned with the establishment, people who are a little bit more center-right, and then some wild card candidates that are somewhat anti-establishment, right? What this means in practicality, who are going to be the candidates? We still anticipate President Lula being the left-wing candidate, given that other options have not come up. There was some talk about potentially the finance minister, Fernando Haddad, being a candidate, but he's lost a lot of credibility with the popular vote, and so we don't anticipate him being a candidate. In terms of the right, the scenario is also complicated because 3 of the potential candidates have legal obstacles that prevent them from actually being able to run. And so we have Jair Bolsonaro, who is the former president. He is now facing legal obstacles. We have Ronaldo Caiado, which is the governor of Goiás, also facing legal obstacles. And we have businessman Pablo Marçal, who is also facing legal obstacles. And so what that means is that who is going to be the candidate is still uncertain. We are betting on potentially governor of São Paulo, Tarcísio de Freitas, being a candidate. But who is going to take up that establishment mantle is still a big question for us.
That's always interesting, never boring. So Julianna, thank you so much. Thank you for joining us, everyone on the line, and for this edition of the Global View. And looking forward to seeing all of you 1 month from now.